What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm gonna start doing a remix, kind of like fixing and changing my sections that I have for videos. So I'm gonna review high yield dividend stocks, REITs. I need to get back into that a little bit and explain my rationales as to why I buy dividend stocks. Of course, not financial advice, for entertainment purposes only. And I have a disclaimer in the description. But there's some really good real estate investment trusts that are high yielders, a little bit of slower dividend growth or some strong dividend growth that are high yielders that I buy. Also, excellent dividend growth stocks. And if you look at my YouTube channel, I kind of have a hybrid. I invest in high yield. I am an income investor and dividend growth investor. So I am that hybrid. I'm the merger of high yield and dividend growth investing. So check out my video. I'm going to really be active on this since I'm done with nurse practitioner boards. And I'm going to reveal to you how much passive income I earned these past few days with Vici Properties, QDTE, XDTE, RDTE. And I'm going to go over something interesting that's called a dividend deduction that happened with me. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these passive income right now. So recently, we'll just start in September 30th, I earned some pretty good dividends. Simon Property Group, 2828, TCPC BlackRock Capital Corp, 306. Remember, Next Point Residential Trust, I sold them. Watch my previous videos when I reveal to you my September dividend income with the REIT that I bought. TSLY 6th Street Specialty Lending, 2581. Nike gave me 279. Coca-Cola gave me 391. Regions Financial gave me 2197. Oak Tree Specialty Lending 2616. ADP gave me 279. FSK KKR 3172 plus 297. Kimberly Clark gave me 564. Vici Properties gave me 3014. I'm going to go over how many shares I own with them. Iron Mountain gave me 348. QDTE gave me 2220. XDTE gave me 1255. YMAX gave me 22 cents. I do need to get more shares in YMAX, to be honest with you. QDTE gave me a dividend deduction, which I'll go over. RDTE gave me 364. And YMAG gave me 16 cents. I'll show you how many shares I have. I need to work on a few things with my dividend portfolio, especially my weekly dividend investing strategy to buy dividend growth stocks. So, still not a bad week with that. I'm going to go over the dividend deduction. I use Motley Fool as a reference right now. Information what a dividend deduction is. The dividends received deduction, or DRD, is a U.S. federal corporate tax deduction. It allows corporations to deduct a proportion of the dividend income they receive from a related entity on their taxes. The deduction shields the company from potential triple taxation on that dividend income. So here's an example they used. Okay, so the dividends received deduction allows corporations to deduct as much as 100% of the dividend income they received on their taxes, preventing the potential for triple taxation. So the deduction comes in tiers. In addition, the company paying the dividend must meet certain qualifications to receive the DRD. So as you see, a real estate investment trust, here's one. The dividend must be from a corporation that's not a REIT or a company exempt from a taxation under Section 501 or 521 under the Internal Revenue Code. It can also be a capital gain dividend from a regulated investment company. The dividend must be paid by a U.S. corporation. Dividends paid by foreign corporations have different deduction rules. Corporations can typically deduct 100% of the dividends from a 10% owned, and it says or more, foreign entity. However, they must own the foreign company stock for at least one full year. In addition, to those qualifications, the dividends received on the deduction, and by the way, I just woke up, I need some Starbucks coffee in me. The dividends received deduction has tiers based on the ownership level. The tiers are as follows: less than 20% ownership, 20 to 80% ownership, 80 plus ownership. So less than 20% if the corporation owns less than 20% of the outstanding shares of the company paying the dividend, it can deduct as much as 50% of the dividend received. 20 to 80% ownership, if the corporation owns 20 to 80% of the company paying the dividend, the DRD is 65%. 80% plus ownership, if the corporation owns more than 80% of the company paying the dividend, it can deduct 100% of the dividend income. So why is it important? The dividends received deduction helps reduce the potential impact of triple taxation. It would occur when the company paying the dividend paid taxes on the income. Company received the dividend, pays taxes on the payment. The company receiving the dividend makes a dividend payment to its shareholders who pay dividends taxes. So the DRD enables the company receiving the dividend to shield as much as 100% of that income from taxes. The deduction helps alleviate the potential burden of triple taxation of the income used to pay dividends to the ultimate shareholders. And I will also use that link there. Thank you, Motley Fool. So let's go over my shares that I own right now and my potential plans with buying more shares for my weekly income investing strategy. So right here, I have a total of $2,883.32 with XDTE weekly. Okay, that is a total of 54.86 shares. So again, I need to get to way more to do well. And here's AIPI, that is a monthly. I did really well with that. Here's QDTE real quick. And I have a total of 66.74 shares. Then I have RDTE, which is a total of 35.3 shares. That needs to go up. And YMAG and YMAX, I have a little puny amount of shares. I just have 1.05. That needs to go up. As well as YMAG, which is 1845. That's puny. That's only not even one share. So that needs to increase. So using that weekly income, and it appears I get paid every Monday because of the day delay with the Yieldmax ETFs and the roundhill ETFs. If you watch my previous video, I'm a little turned off with the Defiance weekly ETFs. I have to really reevaluate that and consider buying them if things look good, but with the decay of the net asset value, it's long-term wise, a reverse split doesn't look good. Now you can look at TSLY. They had their reverse split. It was a weird bubble with Tesla. Crazy. I mean, it's a very volatile stock. So you have to understand that investing in individual stocks, that's more than likely. And it looks like a certain point with TSLY, some people did break even. I did pretty much break even when I sold it and earning the passive income, which is kind of crazy because it's such a volatile ETF with Yieldmax. Am I considering buying them again? Possibly. But right now, I have these weekly dividend ETFs that I really need to focus on. Then I'll start doing that. I have a lot of shares of NVDY. If you saw my previous video that I posted last night, kind of late last night with NVDY, it's quite impressive with the amount of shares. But again, I have to really think on how I'm going to build a monthly dividend ETF and passive income ETF, because I am an income investor and dividend growth investor. Of course, dividend growth always wins, but I can use this income for XDTE, RDTE, QDTE, and future weekly income ETFs and new ones like YMAX and YMAG to buy dividend growth stocks. So again, the price of YMAX and YMAG is not too bad. Now, if we hit a recession, that's a different story. There could be a reverse split on these. You have to be aware of the volatility. I do think that the roundhill ETFs are a little bit more safer when it comes to volatility of the market versus the Yieldmax. You already saw TSLY do a reverse split. You saw the Defiance ETFs, JEPY changed its name, okay, the WDTE, very close to the roundhill symbols, okay. You saw what happened to QQQY. You saw what happened, again, with a 3-for-1 reverse split. You got to be careful with that. And, with the market being so volatile, you have to be very careful. So, CONY, TSLY, NVDY, MSTY, that's one I may rebuy. But, BITO is very volatile too. So you have to be aware of that when you make purchases. Now, BITO is one I need to purchase more, which is a monthly one. This is kind of weak. This is weak sauce right here, only 10 shares. So, I definitely need to have more shares in BITO and be a little aggressive with my passive income investing journey. So tomorrow, I'm going to reveal to you a new REIT that I'm buying. Remember, I told you I sold some REITs and I'm rebuying them because you can see the 4 buys right here. But I'm going to go over a real estate investment trust that is new, okay, that is not going to be rebought. This is a brand new rebuy, okay? And it's very interesting with its diversification in its portfolio. And I'm going to explain to you and provide my rationales as to why I bought it. It's something that's hot right now. It was down during the pandemic. It was looking pretty good going up. And this is a time that I need to capitalize on new REITs. Remember, I am an income investor as well and a high yield investor. And the FFO appears to be decent. I'll go over that tomorrow. But I'm just very excited to bring that to my dividend portfolio. And I'm going to put the brakes on, obviously, buying new dividend growth stocks because I need to focus on the YMAG, the YMAX, BITO, FEPI. I need to probably get to 1,000, 2,000. So, the focus with these weekly dividend and monthly dividend ETFs, there needs to be a focus as well. So I have to really reevaluate my strategies, reevaluate my YouTube channel because I'm getting way more active, give you very good presentations for my dividend investing strategies in my channel, and review dividend stocks upon your request. So if you are interested in me reviewing a dividend stock, don't post it in the comment section. Follow me on X and follow me on Threads, because I will respond to you on there and look at that, because I am starting to get monetized. I am monetized on X. I'm trying to get monetized on Threads. So I would appreciate if you followed me on Threads, Darth Dividend, as well. So if you're new to this YouTube channel, make sure you subscribe and hit notification bells. Don't miss future videos. I will jump to my disclaimer for you. Take care and have a good one. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence when it comes to investing. Again, don't use any of my posts on social media, my YouTube videos, any videos I post for a form of financial advice. It is best to seek financial advice from a financial advisor and tax advice from a tax advisor. So go to them. Don't use my channel as any reference. I'm telling you right now, this is strictly entertainment purposes only. Take care and have a great Saturday, and go Bucks.